We all know governments lie through their teeth. So why should we start believing the People's Bank of China? I mean, the fact of the matter is that, and this is fact, long before the Chinese people were allowed by the government to accumulate physical gold, the People's Bank of China was accumulating gold for the state, and it was siphoning this off into various state accounts to hide the degree of gold accumulation. They were appointed to do this by law, and I've got an English copy of this law, back in 1983. And it wasn't until 2002 that they suddenly turned around and said, okay, we'll let the people buy gold, and we will set up the Shanghai Gold Exchange, which is controlled by the People's Bank, incidentally, in order to facilitate them to do this. And then they started advertising to people, rush out and buy gold. This was the Chinese government advertising, the merits of owning gold and all the rest of it. So, the state, I reckon that by the time 2002 arrived, and remember, we're looking at a market which was a bear market in gold. Gold was being, if you like, rejected by the Western capitalist fiat money system, so much so that it went down to around about $250, from sort of a very brief peak at over $800. And it was during that massive bear market, when everybody in the West was getting rid of gold, that China was quietly sort of buying it in. I mean, they were the hidden buyer of gold. And they've accumulated it. I reckon that by then they'd probably accumulated something like 20,000 tons at contemporary prices. It just made an awful lot of sense because, China wasn't exposed to Keynesian economics. Therefore they understood that gold is true money. What do you do when you're, getting all this foreign inward investment in the sort of 80s and going into the 90s, and then your huge export earnings, and you're controlling the entire foreign exchange situation because you're not allowing ordinary Chinese people to go out and buy foreign currencies for whatever reason. But given that that is the case, what do? You take those flows and you look at something like, well, it makes sense to put something like 10, 15% of those flows into gold, and that gives you somewhere between 20 and 30,000 tons at contemporary prices. Now, they won't have stopped there, of course. I'm sure that they've continued to accumulate gold from time to time. China is a savings-driven economy. There is absolutely massive quantities of currency which is seeking an investment home, and that is around about 6 trillion a year. And I would have thought that gold and silver would be the most effective hedge for Mrs. Wong or whatever living in one of those mega cities in China. So, that I think is the real driver. I mean, I forget what the People's Bank is doing. And anyway, as I said, basically the People's Bank is trying to get rid of dollars, and that's actually what's driving its foreign exchange policy.
We all know governments can be economical with the truth, and when it comes to financial matters, they can downright lie through their teeth. So why should we start believing the People's Bank of China? Well, the fact of the matter is, and this is a fact, long before Chinese citizens were allowed to accumulate physical gold, the People's Bank of China was hoarding it for the state. They weren't just doing this openly, they were siphoning it off into various state accounts to obscure the true extent of their gold accumulation. This was all sanctioned by law, which I've seen a copy of in English dating back to 1983. It wasn't until 2002 that they decided to allow the public to start buying gold. And that's when they set up the Shanghai Gold Exchange, which is controlled by the People's Bank. Now think about this. The Chinese government was actually advertising to its people to go out and buy gold. How often do you see a government promoting the accumulation of an asset that competes with its own currency? This move was particularly interesting because at that time, the gold market was in a deep bear market, with prices bottoming out around $250 per ounce. The West was busy dismissing gold, viewing it as a relic in a world dominated by fiat currencies. But China was quietly buying up gold at these depressed prices. By the time 2002 arrived, China had likely accumulated around 20,000 tons of gold at contemporary prices, all while the Western capitalist system was shedding its gold reserves. China's contrarian approach was driven by a deep understanding of gold's role as true money. Unlike Western nations that were under the influence of Keynesian economics, China recognized gold's intrinsic value. As the country experienced massive inflows of foreign investment in the 1980s and 1990s, coupled with huge export earnings, the Chinese government controlled all foreign exchange. Citizens weren't allowed to buy foreign currencies, so the government had to decide how to allocate these funds. Sensibly, they chose to invest a significant portion, estimated between 10 to 15% in gold, amassing a substantial reserve that could be anywhere from 20,000 to 30,000 tons at those prices. This accumulation wasn't just a hedge against economic uncertainties. It was a strategic move to establish financial independence from the volatile fiat currency system dominated by the West. China, with its savings-driven economy, understood the importance of diversifying its reserves, and gold was the logical choice. In 2002, the policy shift allowing Chinese citizens to buy gold was not just a financial move, it was a cultural shift. The government not only permitted the public to purchase gold, but actively encouraged it. This was facilitated through the Shanghai Gold Exchange, ensuring that the People's Bank had control over this burgeoning market. The Chinese government's messaging was clear. Gold is a valuable asset, and owning it is a smart move. This was a stark contrast to the Western narrative, which often portrayed gold as an outdated investment. The timing of this shift was impeccable. As the Western financial systems were moving towards more financialization and reliance on fiat currencies, China was bolstering its position in a more traditional and stable asset. This move has proven prescient, especially as the global economy faces increasing uncertainties. Let's address a common misconception. The rising price of gold is not necessarily an indication of increasing value. Rather, it's a reflection of the declining purchasing power of fiat currencies. This is a critical distinction. The real story isn't about gold appreciating, but about currencies depreciating. When we see headlines about the People's Bank of China buying gold, the reality is that they are selling dollars. They are exchanging a depreciating asset for a more stable one. This strategy isn't unique to China. Other central banks, particularly in Asia, have been following a similar path. They are accumulating gold as a hedge against the declining value of their foreign exchange reserves, which are often held in dollars. This collective action sends a clear signal. There is diminishing confidence in the long-term value of fiat currencies.
Well, I think there's a misunderstanding about what $2,400 gold price really means. I mean, we can illustrate this with the actions of the People's Bank of China. Read all the headlines. The People's Bank of China has been buying gold. That's actually got it completely the wrong way around. What the People's Bank of China has been doing is selling dollars. The People's Bank of China is in effect saying we think the purchasing power of dollars in our reserves is going down. Now, there are various reasons why that might be the case, but it is the purchasing power of the dollar falling, not the price of gold rising. And this is where everybody gets gold wrong, and particularly the establishment, the bullion banks in London, the swaps on COMEX, all these guys, their only experience has been in a fiat currency environment since particularly the mid-1980s, when everything was financialized with Big Bang in London and so on and so forth. So what they're doing is they're trading something. They account in dollars or they account in euros or pounds or whatever. So their comparison is profits and losses measured in the fiat currencies. But actually in monetary terms, because gold is legal money without counterparty risk everywhere, and euro and mine currency are not counterparty risk free, and they're not used everywhere, you can see where the risk is. The risk is in the fiat currencies. So on that basis, what we're seeing with People's Bank of China and also all the other central banks who are doing exactly the same thing is they're sending a very clear signal that they're seeing the purchasing power of fiat currencies declining. Well, I mean, if you look at the charts, this is what everybody does when they don't understand what's going on. Look at the charts, and you can see there's been a long consolidation period, and so the breakout was bound to be, pretty dramatic, but dramatic initially, and again, talking purely in charting terms, it's the start of a new bull phase. So that's where we are. I think what we've seen sort of part one of the new bull phase, and that was a run up to 24.45 or whatever it got to. We're now consolidating that, and we've been consolidating that for the last 2 months or so, 2 or 3 months. And at some stage, that consolidation will end, and off we go. But as I say, what it's actually about is the declining purchasing power of the dollar, which we're talking about when we look at the gold price, or if you like, the dollar priced in gold. What gives the dollar its value? I mean, we're talking about bits of paper or units on in some sort of electronic account. It's just faith in it. It's just faith. That's all it is. What gives gold its value? Well, you can actually hold it, and it's legal money. This is the point. I remember when we were, when you very kindly invited me to talk in Frankfurt. I made this point to the invited audience, and I don't think people understand this point enough. So gold will continue to appear to rise, but actually what's happening is that its fiat currency is falling. It's estimated that Chinese households save 35% of their income. Now, 35% of their income is around about $6 trillion on Chinese GDP. So $6 trillion, where does it go? Property? Yesterday's story. Stock market? Not really. It goes into bank accounts, and it goes into gold. And I think it's increasingly going to go into gold and also silver, because Chinese individuals can't go and buy foreign currencies or foreign stocks or anything like that. They don't have these avenues which we have become accustomed to, whether the avenues are good or bad.
The Chinese government understands the importance of gold as a safeguard against economic volatility. For Mrs. Wang in a Chinese megacity, gold and silver represent the most effective hedge against financial instability. Unlike Western citizens, who have multiple avenues for investment, stocks, real estate, foreign currencies, Chinese citizens have limited options. This restriction makes gold an even more attractive investment, especially as the country continues to accumulate wealth at a staggering rate. China's savings-driven economy generates around $6 trillion annually, and a significant portion of this finds its way into gold and silver. This isn't just a strategy for the affluent, it's a widespread cultural norm. Gold jewelry, gold coins, and even gold bars are common investments for ordinary Chinese citizens. The government's endorsement of gold as a safe investment only reinforces this trend. Moreover, as China's middle class grows, so does the demand for gold, further solidifying its role as a key asset in personal and national wealth preservation. At the core of this discussion is the understanding that fiat currencies are in decline. The purchasing power of the dollar, euro, and other major currencies is eroding. This isn't merely a temporary phenomenon, but a fundamental shift in the global economic landscape. Central banks worldwide are reacting to this by increasing their gold reserves, preparing for a potential future where fiat currencies hold less value. This shift towards gold is not just a financial strategy, but a reflection of broader economic realities. Fiat currencies, by their very nature, are susceptible to inflation and devaluation. As governments continue to print money and accumulate debt, the value of these currencies declines. Gold, with its intrinsic value and historical significance, becomes an attractive alternative. It's not just a hedge, it's a foundation for a more secure and stable financial future. The erosion of fiat currency value is evident in various economic metrics, including inflation rates and the real value of wages. As purchasing power declines, the cost of living increases, creating a challenging environment for consumers. This trend has been exacerbated by recent global events, such as the COVID-19 pandemic and geopolitical tensions, which have disrupted supply chains and contributed to economic instability. In such an environment, assets like gold and silver, which have stood the test of time, become even more critical for preserving wealth. To our viewers, this is a crucial time to reassess your investment strategies. The signals from global central banks, particularly the People's Bank of China, are clear. There is a growing recognition that fiat currencies are losing value, and the accumulation of gold and silver is a strategic move to preserve wealth. Understanding this shift and positioning your investments accordingly is vital. For those of you wondering about the practical steps you can take, consider diversifying your portfolio to include physical gold and silver. Whether through purchasing bullion, coins, or investing in gold ETFs, these assets can provide a hedge against the declining purchasing power of fiat currencies. Moreover, educating yourself about the broader economic trends and staying updated with reliable financial news sources will empower you to make informed decisions. As we look ahead, the future of gold and silver as investment assets appears brighter than ever. The global economic landscape is shifting, and these precious metals are proving to be reliable stores of value in an increasingly uncertain environment. The ongoing accumulation of gold by China and other nations is not just a defensive measure, but a proactive strategy to position themselves favorably in a new financial order. For our audience, the message is simple. Consider the role of gold and silver in your portfolio. As fiat currencies face devaluation and central banks diversify their reserves, these metals offer a hedge against inflation and economic instability. Whether you're a seasoned investor or just beginning to explore precious metals, now is the time to understand their role in preserving wealth. The importance of gold and silver cannot be overstated in the current economic climate. These metals provide a unique combination of stability and liquidity, making them ideal for both preserving and growing wealth. As we continue to see fluctuations in the value of fiat currencies and the instability of global markets, gold and silver remain steadfast. In summary, the actions of the People's Bank of China and other central banks underscore a fundamental shift in global finance. The era of fiat currency dominance is waning, and the return to tangible, intrinsic assets like gold and silver is gaining momentum. As we continue to monitor these developments, staying informed and strategically positioning your investments will be crucial. Thank you for being with us. Stay informed, stay strategic, and let's navigate this evolving landscape together. Gold and silver are more than just commodities. They are the bedrock of a stable financial future. Let's embrace the opportunities they present and build a more secure financial future for ourselves and future generations. As always, our goal is to provide you with the most accurate and insightful information to help you navigate the complexities of the financial world. Whether you are an investor, a student of economics, or simply someone interested in safeguarding your financial future, understanding the dynamics at play with gold and silver is essential. Let's continue this journey together, exploring the full potential of these timeless assets in an ever-changing world.
Stay informed about the latest developments shaping the precious metals market with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today. Link in the description.